Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to briefly talk about banks and how you value them and compare a couple of the bigger banks in terms of valuation. This was a question Dylan had asked, and I just wanted to do a brief video kind of explaining where it comes from.
Yeah, and should I throw all my money at Bank of America? Not all of it, but if you like this kind of entertaining stock market content, just give us a like and subscribe, and we'll get started as soon as I find the button.
Two Super Guys Trade Stocks.
Off to a smooth
I've
start
heard
so
that's
far.
I've heard that's a phrase you've had to use in the bedroom before. As soon as I find the button. Anyways, the reason why we're doing this story is right here. This is the 3-month chart of Citigroup. Citigroup popped 13% on Friday. That was quite a large move for a big, well-known bank, right? In terms of kind of questions, Dylan was like, well, how do you value banks? Is it like a discounted cash flow, that sort of thing? They really are kind of unique in terms of their valuation, and we're going to kind of briefly talk about how in general they're valued and compare a couple of them bigger banks in terms of their valuation metrics. This is a 1-year chart, so when you put it in context of that little 13% pop, not nearly as impressive when you zoom out a little bit, unfortunately.
I am biased because I hate Citi. I have owned Citi for a long time, and it just wouldn't move. While literally every single, not most of them, every single other bank stock would have like 15-20% for the year, and then that would be like down 6. So
Yep.
no.
Yeah. Citigroup has been constantly a laggard, basically. But in terms of valuing banks, what generally is used is price to book, right? Basically, you look at the balance sheet, you look at the total assets and total liabilities, and the difference between the two is the value of the bank. You can also use price to tangible book value, meaning that you're getting rid of goodwill, right? You know how I feel about goodwill?
You do
I
not
talked
like
about this.
goodwill.
Yeah, right. It depends. Like goodwill for a company like Coca-Cola, yeah, certainly the formula has some value. Their logos have some value. But when a company like Citigroup, like how much are you going to be willing to pay for Citigroup's little umbrella logo? I could care
So
less.
much.
Yeah, right.
So much
Uh,
money.
maybe some small value, but not a significant portion. So a price to intangible book value is a little bit better metric in terms of the actual, loan portfolio minus the liabilities or like the deposits on account. That's generally what they're talking about when they talk about assets and liabilities for a bank, right? Their assets are loans mostly for most banks, commercial banks like Citigroup, and their liabilities are deposit accounts. You, me, our checking account, right? That's basically what it comes down to. So one of the interesting news stories, kind of related to this whole pop, is that Warren Buffett had bought $2.5 billion worth of Citigroup stock. Interesting, huh?
Yeah, he's buying a lot because he just bought a bunch of Oxy. What do you have?
So
Like 100 billion in cash? Now he's gonna have way less than that.
they used about a third or so of their cash in the first quarter. Um, I think that people talk about cloning and that sort of stuff of major prominent investors. I think this is one area in which I think cloning is a more useful metric than people give it credit for.
Wait, what do you mean
Because
cloning?
cloning, as in that, it's a great question, as in that you or I are certainly not qualified to evaluate the balance sheet of a company like Citigroup and determine whether or not these are good, high quality loans and that we think that they represent a stable, safe kind of investment strategy for the bank, right?
I highly
That's well,
disagree. I would just use Wikipedia. Give me 5 minutes.
yeah. 5 minutes of Wikipedia. That's exactly. I think that's actually what Warren Buffett's kind of analysis comes down to. 5 minutes of Wikipedia.
It's not bad.
But when you're talking about investing in banks and insurance companies, I think cloning is a very viable skill set. Mohnish pabrai would agree, probably. Okay, but yeah, he'd been buying Citigroup. He even talked about Wells Fargo being back in 2009 his single highest conviction stock. If I could only own one. Granted, there was fraud, but just from a valuation standpoint, yeah,
Yeah.
yeah.
Okay.
So, yeah.
But theoretically, if he's buying Citigroup, all banks should go up, ideally,
Ah,
because they would all have the same. What am I looking for? Same
tailwinds,
reasons.
macroeconomic environment.
Yeah,
I
it's
get
the
what you're
exact
saying. Yeah,
same across the board.
but it's not what you're buying per se; it's what you're having to pay that makes a big difference, and that's why Buffett would be attracted to a Citigroup. So this is actually from Macro Trends, Dylan's favorite website.
That's dope.
You can actually go on there, and they already have charts of the price to book ratio. They don't have intangible book. This is just price to book. But the cool thing about it is that it shows it over more than a decade, displays it graphically, allows you to see where they are within their historical trends, and then allows you to compare it to other banks. So this is Citigroup. You're looking at here, see this number here, 0.4, 0.6. That tends to be the range for Citigroup. They're bouncing around in this range. They got all the way up to close to 0.8 at one point in time, but now if you look, they're kind of on the lower end of the historical range, down to 0.5, somewhere in that ballpark, maybe headed down towards 0.4. So on the lower end of their historical range.
Yeah. Okay. I want to see the other banks.
Yeah. Like, what do you think? The average bank sells for in terms of price to book ratio.
0.9 to 1.1.
That's actually very good. 1.1 is about classic. So
okay.
When you're looking at a price to book ratio, yeah, they're half. They're literally half of what their colleagues are. So in terms of the other ones, I looked up Bank of America right here. Right now trading at about a 1.0. So about fair value if you're looking at from a price to book ratio.
But
and then
there
finally,
has to be a reason for that though, right? Because Citi is trading, you would look at this as, okay, here's a great example. Intel AMD. Intel as a value looks fantastic, but if you had been invested in Intel for 20 years, you're really upset with yourself for 20 full years. So there's got to be a reason why other banks are valued higher and give their shareholders more money in return, even while being valued higher.
Yeah. Citigroup is consistently underperformed in terms of stock returns as well. And part of that might be just that they've never gotten into an multiple expansion kind of phase. If you look at Bank of America here, at one point, they were trading 0.5 for the longest time, back in 2016. And then they have this kind of run up where they went up to like 1.0, and they've kind of stood around that as a baseline now. That's what you're hoping for with Citigroup, is that eventually they will get priced like their peers and go from this 0.6 price to book ratio and eventually have a multiple expansion up to 1.0 and be trading about with their peers. It just hasn't happened as of yet, and it's been a long time in the waiting, which is why they've consistently underperformed.
Fair.
Yep. But yeah, Bank of America about one, and then everyone's Wall Street's favorite bank, J.P. Morgan here. I actually didn't put the label on this one. But they went as high as 1.5 for quite a while, and now they're trading back towards 1. I mean, now why that is, there's definitely some questions as far as like Citigroup has a new CEO. One of the things I talked about before when I actually owned Citigroup was that they had one of the larger global footprints. They were much more interested in banking the unbanked, that sort of thing, which now is cryptocurrency's song. But they've actually pulled back out of those unprofitable markets. They eliminated their South Korea, Mexico, and a few other countries. They've tried to concentrate more on profitable businesses. So maybe that's part of what Buffett's seeing as a tailwind and hoping that they get back to this more consistent, peer valuation of a 1.0 book to value ratio, and, with them concentrating on actual profitable business segments rather than simply trying to be in areas where no one else is operating.
Right. There's one thing that I've learned is that it doesn't matter how good fundamentals are or how much cash you have. If all of Wall Street doesn't like you, your returns are not going to be great, right? It doesn't matter. Intel has like $100 billion. It doesn't matter. It won't go high. And everyone's been saying the same thing every year for 20 years. It's kind of the same thing with Citi. I don't know why, but I'm in the stock market to get more money. So why wouldn't I do one of the other banks? I just don't understand why you did Citi.
Yeah, I understand. I think when you're investing for the best returns, to actually blow it out of the water, you're looking for a few things to happen. Well, it's not just a deal. You're looking for, because at the end of the day, stocks are priced on like a multiple, right, on a future kind of basis. You want stocks that are growing their revenue, they're bringing that through to the bottom line, they're growing their profits. You want stocks that are underpriced in terms of their multiple, whatever multiple they're using, doesn't matter. You want stocks that are less than their peers. And then you want stocks that ideally are buying back shares, so you're increasing your ownership percentage. If you get a tailwind of all those things together, you get Apple-like situations.
Yeah.
That's the idea. When you were investing in Apple back in like 2017, you had Since you've had multiple expansion, you've had share buybacks, you've had revenue growth, you've had profit growth. Once you see all of these come together, that's when you get these multi-baggers. And I think that's what they're pursuing. And Intel has that potential. Citigroup has that potential because they're priced below their peers. I know. It's not definitely not a certainty, and it could be a decade before it happened. And just so it happened, Apple did it immediately thereafter. But these things are slow in the process. But over the long run, the numbers say they should win. Should
win. All right.
Should.
There we go. Citi should win, guys.
Should.
Well, Buffett's smarter than I am, so I mean, I'm probably gonna buy some shares just because he bought some, to be honest. So,
I like it.
All right.
Catch you guys in the next one.
Have a good one.